first of all, I think we need to really separate the two different markets. So Bitcoin, which has already gone through the kind of the acceptance and it's through the adoption maturity phase, and the other cryptocurrencies, they still are kind of in search of a real use case and position in the financial market. If we're looking at Bitcoin, we really need to look at the kind of cycles and long term. There are different factors of correlation. I'm still much more optimistic rather than cautious this year because especially after the launch of the ETF and the establishment of the strategic Bitcoin reserve, I think the trend that we will see throughout the rest of the year is kind of inevitable. Bitcoin is going to be a major part of the financial system. Is going to be one of the assets that all the nation states will fight to accumulate, and it's in really tight supply. So I think the trend is quite inevitable, but it's going to be probably decorrelated from the trends that we'll see in the other crypto assets.
Alessio, Mandy jumping in here. Going back to your comment about the hack on the crypto exchange a couple of weeks ago, what does that say about the security of these digital assets, which is absolutely key to investor confidence to invest in this asset?
Well, I think there's a trade-off, right? So we have a new technology that allows us to do amazing things. For example, we can settle financial transactions or cross-border payments at a fraction of a dollar instantaneously. So it is amazing and everything is traceable again. But yes, there is a trade-off with security. This new technology is exposed to additional risks in terms of and security and vectors that we need to really mitigate if we want to make this technology mainstream. I think companies like Hex Trust and other custodians have been working for many years to actually mitigate these risks. And I would say today, it is most major custodians in the market can actually offer a certain level of service that suits the risk appetite and security standards of traditional financial institutions.
So even though Trump signed that executive order to create the Bitcoin strategic reserve and digital asset stockpile, if you just take a look at the performance of some key cryptocurrencies over the past week, I mean, Bitcoin's down 9%, XRP down 13%, ETH down 14%, Solana down 14%. And I know that you said they'd had a good run, so, you know, maybe just some profit taking. But nonetheless, what does the industry want to hear, whether from either the Trump administration or elsewhere, to just put a floor in these currencies and give them a little bit more of a kick?
Yeah. So, well, I think it's important to highlight that there's a big difference between the Bitcoin strategic reserve and the digital asset stockpile. The Bitcoin strategic reserve cannot be sold. It's a long-term investment from the government and should not be touched. The stockpile, let's put it this way, is kind of an actively managed portfolio that can be sold at any time to be rebalanced. So the performance of the assets included in the SBR versus the digital asset stockpile can be quite different. Now, why the market sold? I think there were a lot of there was a high level of expectation that the establishment of the strategic reserve will basically imply a certain rigorous approach in terms of accumulation of Bitcoin, maybe using even taxpayers' money. It has been clarified that the government will not use taxpayers' money to acquire additional Bitcoins for the SBR. And this has obviously reduced the level of excitement of the market, and probably the market was already overbought. I still remain very optimistic because, first of all, stockpile means that the US and probably other governments will follow suit. They will not be able to sell the Bitcoins that they already have in their balance sheets. And secondly, there are other ways to accumulate Bitcoins other than using taxpayers' money. And in the long term, they could play actually a big role in the accumulation of Bitcoins.